Are you or someone you know looking to buy or sell a home? When you use a HomeGain Realtor to buy or sell a home, you can get $150. Visit HomeGain.com and click on the Promo 150 banner at the top of the page to get started. Compare HomeGain Realtors and choose your favorite. Complete your home purchase or sale transaction with a HomeGain Realtor, and HomeGain will pay you $150. Get started today by going to HomeGain.com. Welcome back, guys, to Real Estate Radio. I'm your host, Ryan Sloper, joined by my guest, Louis Cammarosano. A quick reminder, Real Estate Radio is designed to build the Washington, D.C. Metro's housing and credit markets one house at a time. If you ever have any questions, concerns, whether it's finance, real estate, credit-related, I'm here to help. I'm going to give you the off-air number. It's 877-245-2030. That's 877-245-2030. And remember, that's an off-air number. If you call that number, you will get a voicemail. I'll get back to you by the end of business today. So like I said, if you have any questions at all, feel free to reach out to me. Before we went to break, we were discussing HARP, the Home Affordable Refinance Program. And I was discussing, really my disgust with the way that this program was brought out, where we're kind of given some guidelines of what we think the program's going to be. But until the final details are actually released, we're not going to know really who it can affect and or who it will help and who it won't help. I'm assuming that the majority is going to be the people that it won't help, Louis, from what you and I have discussed. One of the big questions is obviously, how do I check this? And I went over this last week, but the first step is just going to Fannie Mae and Freddie Mac's website, typing in your information, which will probably require your Social Security number and address, and you'll be able to determine if you have a Fannie Mae or Freddie Mac loan. Beyond that, I would say just contact me directly. What I'm going to do for a lot of the listeners that have been calling in, I'm putting them actually on my email list where I can keep them up to date when this plan is actually final and somebody can actually originate a mortgage that this plan applies to. I will give you, up to the minute information that it's going to be accurate and timely as according to, once they release the guidelines and they say that, okay, now somebody can originate the loan, I'll let you know so that you can actually apply for it. The best thing to do in the meantime, just keep your eye out for more details. My phone number, 877-245-2030. That's 877-245-2030. So one of the other big questions from listeners on this program was, I currently pay private mortgage insurance now. Will my private mortgage insurance payments go up with the new refinance program? And the answer as of right now is that your private mortgage insurance payments will not increase at all. However, the transfer of your mortgage insurance policy may require an extra step. Remember that the lender that you're paying the private mortgage insurance to, you might want to contact them if they currently have that insurance policy because the transaction might go smoother. So there's so many caveats when it comes to that. But, the short answer is that there shouldn't be any change in your actual mortgage insurance premiums. Another big question.
Ryan, can you explain the PMI to the listeners? I'm a bit confused because if the home value has gone down, wouldn't you expect the PMI to go down? Can you explain that for us?
Sure. Well, private mortgage insurance is basically given to a client when they have less than a 20% down payment to put down on their house. Okay. So the insurance company, private mortgage insurance company, comes in and insures the 20% shortfall above that 80% in case a borrower to default on their loan. This insurance company would come in and basically be able to give the bank, pay a portion of the money back to the bank. So it depends on the insurance company, but for this refinance program, basically what they're saying is that it's going to improve the mortgage insurance company's positioning as far as the borrower is going to have a cheaper monthly payment. Whatever that mortgage insurance payment was before this new refinance, it's going to stay exactly the same. So if they don't have it at all, they're not going to have it in the new refinance. If they have it when they refinance, it's going to be exactly the same on the new refinance. It's just a matter of getting the mortgage insurance company to also agree to this. It's not just Fannie Mae and Freddie Mac now.
Right.
You know what I mean? And that's going to, once again, there's a whole nother problem when you're now bringing another company into this.
The government generally can't
force anybody to do anything.
Well, but they did that with General Motors.
Right. Yep.
They can if they wanted to.
And I'm assuming one of the big things here, Louis, is going to be that I would imagine Fannie Mae and Freddie Mac they've worked out some sort of agreement with a lot of the private mortgage insurance companies.
You would
because
hope that in advance they might have worked that out. You can't be too sure that.
I'm really hoping so, because like I said, the bulk of the the items that we have right now and the information we're going off of can obviously change. Like I think they've said that they're probably not going to require appraisals on these properties, but I don't really see that going to happen because they still want to go out and make sure the house isn't falling down. So even though the value doesn't matter, it still matters, what's the condition of the house, because I can't imagine that the government would want to give a new loan to somebody that their house is, basically falling down. Or
but you can imagine that they didn't think through everything.
No, they haven't thought through everything. And, it kind of brings me to my next point. I was listening to a program. They were talking about, they're trying to find another way to kind of curtail all the foreclosures from coming to market. And one of them we talked about this months ago was them renting back the properties that they own instead of putting them back on the market.
Right, the government is landlord.
Yeah, and it seems like this is getting more and more play. It's kind of scary. I'm hoping that this doesn't go through because that's the last thing that we need is them becoming landlords. And really, they're acting as if it would
would crush the rental market.
It would crush the rental market. They're acting as if it would, if it's going to benefit, the people out there. One of the examples was that if somebody's living in the house wasn't able to make payments, they could go back and restructure as if them just paying rent and figure out what their rent rate would be and pay to the same non-paying person that was living in there to begin with.
That's ridiculous. What if the rent is higher?
Right. What if it's higher? And then after all that's said and done, really they were only reason they really be holding on to it long term was because they know that eventually the properties values are going to swing back into their favor,
right,
and they're going to make profit.
Right. So the government is subsidizing somebody to live cheaper and then make a profit.
Yeah.
Well, that's a little bit better than the bank bailouts. At least individuals benefit from it, but I don't like that either.
No, and it's because once again, you're putting somebody that doesn't want to pay right back into a situation of they're still not going to pay.
What do they call it? Moral hazard?
Yeah, pretty much. And I mean, like we've discussed this at length, Louis, just about letting everything just clear out. Like I don't care if we've got a billion foreclosures, put them on the market. Is it going to hurt values? Yes. You know what? There's a lot of people that would take advantage of interest rates if things were actually at a reasonable price. And in the Washington D.C. metro area, obviously it's an anomaly to the rest of the country because we actually have prices that have been increasing month over month.
And the reason you have that is because the
very good employment situation.
The federal government is increasing month over month.
Yes. So we have very good employment situation. We have a lot of people transferring here from other states because jobs are more plentiful, they're more stable. And it's not like that in the rest of the country. I mean, most of the, we hear more and more of these Occupy Wall Street protests popping up all over the country. It's not going on here in D.C. At least not that I know of. Not on a grand scale. Some of the other places. That's just because of the job situation. I just.
You mean there's no Occupy Washington yet?
Yes, which we discussed, I believe, is the inevitable. At some point, that's going to happen. I think that much of what's going on there at Wall Street now is kind of you said last week, I believe you said, why didn't this happen like 2 years ago, right?
Well, what I said was that the Occupy Wall Street are getting half the picture, right? Is that Washington enables Wall Street to do what they do, and if you don't protest both of them, then you're really barking up the wrong tree. Yeah,
I agree. They do pretty much go hand in hand. And
Wall Street can only take the risks if the government guarantees them.
Yeah,
and they can only get rich, and the reason they can get rich is because they could take the biggest risks and make the biggest profits, and if they lose, they still get bailed out.
The government is their insurance policy.
What is it in Raging Bull? He says, if you win, you win. If you lose, you still win.
Yeah.
I mean, that's how the banks operate right now, and they manage to hold sway over Washington, and Washington has them kind of as wards, but Washington doesn't extract much out of the banks for this favored position that they give them. And meanwhile, the rest of the companies that are struggling hard to do well in a free market economy aren't doing well because they're competing with government-favored entities like the big banks.
Yeah, I mean, if you don't have money to write the check to the politician, you're really not going to get things going in your favor. I mean, you think of all these subsidies like GE and the big guys get. It's only because they have the money,
Well, why did they mandate that light bulbs have to be a certain kind that GE manufactures in China?
Right. Yep. I mean, you're 100% accurate with that. Now, it is one of those things that, it bothers me to no end, but I just don't really see any of that changing until they actually they decide that they want to, get rid of the whole the lobbying that goes on, we're really not going to be able to get rid of the problem that we have.
True, and that's the reason. The reason is in capitalism. In capitalism, you can vote against your company by not buying the products that you don't like.
Right.
But the thing about the banks is, I don't buy anything from Goldman Sachs, but somehow they get a lot of money. That's because they're functioning with the tacit or implicit guarantee of the U.S. government, which you pay taxes to.
And it's interesting too because the government hand selects which companies they wanted to bail out, which was what happened. And I mean,
you have no choice over that,
right? Yeah, I mean, how fair is that to the guy that actually did a good job of staying away from a lot of risky investments back when? Or I'm just talking about the smaller banks. I believe we've had about 80 or so banks go under this year, and most of which we don't really hear that in the media. We don't know that that's going on. I think
they're too small to bail. I mean, that was the concept there, that there was too big to fail and they're too small to bail, and you figure no one's going to miss that bank,
right?
And so they go under. I mean, they should basically have allowed the larger banks to go under. And really, if they wanted to spend money, the way I would have spent it wisely was I would have said, okay, these banks screwed up. We're going to give the depositors back their money, and now you're out of business. And then the free market would decide where those people would then go and trust their money in the new bank.
Yeah, and the interesting part is, because I really do think that the small community banks are the ones that we really need. They understand the local markets. Like a lot of the credit unions, Louis, they'll
right.
actually they'll go in and lend money on a condo that has like a huge investor saturation that nobody else will lend to.
Well, the other problem is you have the FDIC. When you have the FDIC, people don't care where they put their money because they figure it's guaranteed. So
right.
You don't ask questions like, is my bank going to keep my money safe?
Yep.
So they're not really competing in the free market. The bank is basically going to do what it's going to do, and if it screws up, the depositors are covered by the FDIC, and if they screw up even more with derivative trading, they'll get bailed out.
Yeah, I agree.
But in a free market, a bank would be foolish to take those kind of risks because the depositor, they'd be responsible to the depositors. There's no insurance. And if they made derivative trades that turned out risky, they'd go out of business.
Yeah, you're 100% correct. We're coming up on a break, Louis. When we come back, we're going to jump into the top tips for short sale success, what you can do to improve your chances of getting your short sale to go through when we come back.